Hi, this is the Bulletin Board Heroes here at zakstraderscafe.com for Friday the 11th of August, and not very pretty actually towards the end of this week. We've had a 3-day failure, or at least a 2-day failure at the 200-day moving average up there at 76.20. Below that there's a risk of breaking that uptrend line from last month. That's around 75.05, and below that then we have the risk of a test of mid-July support around 7400. End of day close above 76.20, then we've got the chance of breaking that February resistance line around 76.90, and then hoping to get up to the top of that rising trend channel from June around the 78.50 level. But at the moment, just hoping and praying that we don't break that July uptrend line, otherwise it's back towards 7400. On to the DAX, and here it's been all about trying to hold the uptrend line there from the autumn last year. That was around 15,700. Obviously there might be a bit of wiggle room in terms of support, maybe down towards the 15,500 area, but really the idea here is that we hold the rising trend channel from this time last year and then push back up towards the 16,000 to 16,500 area. RSI below neutral 50, so still have that risk of breaking down and maybe heading towards as bad as the 200-day moving average there at 15,200. But at the moment, still consolidating there at the bottom of the channel, so there's no point getting too bearish. If there's an end-of-day close through the 50-day moving average at 16,000, then we could say that we're back on our way to the upside. On to the Dow, where we've been watching the recent dance either side of the, or just from 35,000 and above. Situation here is that obviously that 35,000 area should and hopefully will stay in place because the RSI is still above neutral 50, it's at 54, but we can't discount the idea of a move down towards June, July resistance around 34,500, and even the 50-day line there just below that particular level, but just holding in that consolidation for the last 2-3 weeks on the Dow. Speaking of consolidation, we have Bitcoin, which has been in the consolidation either side of the rising the 50-day moving average. I don't think it's rising anymore. Actually, the 50-day moving average there, the blue line there, that's given us a range between around 28,600 and 30,000. We want to see an end-of-day close outside that particular range, preferably through the 50-day line. That takes us up to 32,000 July resistance. On the downside, below 28,600, there's a risk of a move up, down to the 200-day line, currently at 27,000, but just a pretty dead market there, all in all. Moving on to the stocks, and starting off with Asiamet, which hit that line, that target line there we had, the top of that March trend channel around 1.5 pence, just through that line, but maybe we're looking for a bit more as well. If you are looking for a bit more, then the new target here, if we can get through 1.6 pence, let's say on an end-of-day close basis, would be as high as 2 pence by the end of next month at the top of a rising trend channel from January. The upside value while we hold above the old April peak around 1.3, so above 1.3 up to 2 pence is the best case scenario for Asiamet. On to eEnergy, and things are moving here reasonably. We've got this consolidation here after the unfilled gap to the upside, bear trap gap reversal. All that's a bit slow. We're still looking for this market or the stock to head up to 7.5 pence. Maybe by the end of next month. We've got this line of resistance from this time last year to break around 5.5 pence. We can do that over the next few sessions, then 7.5 pence could be on the way by the end of next month or a bit sooner. GCM is the next contender, and here you can see that it's the first signs of the shares turning around. Looks like we've got a rising trend channel base there. That's that trend channel's been in place since June. The big trigger here would be a break of the 50-day line at 2.4 pence. Above that, we're looking for as high as 3.3 pence by the end of next month. Ideally, we stay above 2 pence, obviously, as that's the floor of the channel. On to one of the most followed stocks around, Helium One, and here you can see the what looks like a mid-move consolidation between around 8.5 and 10 pence continues. We've got the 50 and 200-day moving averages rising. Obviously, the whole thing started with that island reversal, one-day island reversal, very strong signal. Want to see the price action through 10 pence, maybe ahead of next month's spud, and then we could head up to as high as 15 pence by the end of next month. But ideally we stay above 8.5 and the floor of that bull flag. Moving along to Haydale, which is also trying to get its act together at the moment. Here we've got our classic bear trap gap reversal. So the gap higher today, bear trap from below June support around the 0.88 level, and the bullish divergence line there as well. So everything that we like in a potential turnaround. And we stay above the old June support, so around the 0.88 pence level. Then we're looking for 1.4 pence as soon as the end of next month. If you're cautious, you wait for an end of day close back above the 50-day moving average, by which time hopefully that will be rising, and that tends to be an extra signal as well. On to light science, which I've looked at on many days, partly because the market is relatively short of good-looking bullish turnarounds. But here, the shares making their way towards that target line again, around 2.6 pence above that. We're looking for 3.8 by the end of next month, and we want to stay above 1.6 pence, our initial target there in the meantime. One of the best looking situations at the moment, on a charting perspective at least, is LungLife, which I don't think anybody has mentioned on Twitter anywhere, but here we are. Bear trap gap reversal, so it's a bear trap from below the June support there at 24 pence, unfilled gap to the upside, and I think there was another one there in the middle of, or towards the end of last month. We've broken out of the recent consolidation, so an end of day close above the initial August resistance should be enough to take us, so it's around sort of 66 pence, should be enough to take us up to 100 pence as soon as the end of next month. But a very good looking turnaround there. The bullish divergence and sharply rising 50-day moving average. On to Lifesafe, where I see that Premier and Miton have chipped in with 6% stake, which is always a nice thing to happen. Here we had we had actually a couple of gaps, but it's a bullish divergence set up there. Unfilled gap to the upside at the beginning of June, and we have powered away since then after a bit of consolidation. That suggests that finally, after a long time, many months of waiting, we could get up to 60 pence by the end of next month while we're above the 40 pence level. So a reasonably simple risk-reward setup, and backed by that stake building from a very high-profile small-cap fund manager. On to one of the stocks which has been rising almost daily since it came back from suspension. Here we've got Marula, and we're looking for 20 pence, maybe as soon as the end of next month. It looks like the shares could probably deliver that by the end of this month, especially while that we remain above that initial May resistance around 13. So above 13, looking for 20 pence on Marula, hopefully over the next few weeks or even less. Onto a stock which doesn't get much airtime, but here it is today. Nuformix. We've had the bear trap here. We've had the gap to the upside. It obviously was filled, but still above the floor of that gap there at 0.27. We're looking for up to 0.42 as soon as the end of next month. If you're cautious, maybe you want to see a few more days for the shares above that grey 200-day moving average, but looks a little bit better there than it has for quite some time. On to Novacyt, which gapped up with that turnaround that we had back in July. We already had bullish divergence there, and so was in the frame as a potential decent turnaround. We've got this V-shaped bull flag either side of the 200-day moving average, unfilled gap up to the upside yesterday, so that means that we should be easily achieving that February resistance line target at 84 pence while we're above 66 pence, but we're looking really for £1.10 perhaps as soon as the end of next month, given that this looks like a long-standing and quite solid turnaround or reversal formation on the Novacyt chart. On to the last three, and the first one is one which hasn't been around here for quite a long time, Strategic Minerals, but we finally broken higher through that line of resistance from April. That's around 0.17. Above that, looking for up to 0.4 pence by the end of next month. We've also got a rising 50-day moving average near the low, a bullish divergence line as well. So probably all that's missing, if you're cautious, is an end of day close through the 200-day moving average, the grey line there at 0.22. That's been blocking the share since March, but above that, 0.4 should be on the way over the next 4 to 6 weeks, and ideally we stay above 0.18 in the meantime. On to Versarien, and here you can see that the shares have still trying to base build here. We've broken a line of resistance there from back in June. That's around the 1.4 pence level. Above that, looking for at least the 50-day moving average around 2 pence as we have seen that line block progress since the middle of June. But just a range there between the 1.3 and 2 pence levels for Versarien. That's it from me today. More updates over the weekend.